Please confirm if I am audible. Please confirm if I am audible. Okay, hello and welcome to the third class of ACCA Financial Reporting. Today we are going to discuss questions which are related to our chapter number 1. So we have almost completed all the major topics of this chapter till now. So first we start with the question, then we will see the remaining portion of this chapter. Okay, so I have given you some homework yesterday. I hope you have done it, and if you have any doubt you can just discuss the doubts in the live chat. Again I am going to solve all those questions again in the class, so you don't have to worry about doubt if you have not asked yet. Okay, chalo. So regarding question number 1, we have done this in the previous class. Then comes question number 2, which is about true and false. Okay, before doing question, I think we should do a quick revision of the topics that we have studied yesterday. So what we have studied yesterday, we have studied statement of cash flow, where we have discussed what is cash flow statement, where it is a primary statement where it shows the overall inflow or outflow of the cash during the accounting period and compare the closing value of the cash with the opening value of the cash during the accounting period. So whatever the cash you have at the start of the accounting period and whatever the cash you have at the end of the accounting period will get be compared between each other, and all the inflow and outflow of the cash are also disclosed in this statement. The inflow and outflow are disclosed in three categories. First, operating activity, then investing activity, and then financing activity. We have discussed various examples of what should be considered as operating activity, what will be considered as investing activity, and what will be considered as financing activity. This is a separate chapter in your ACCA financial accounting, so we will discuss more in detail in that chapter. Okay. After that, we have studied statement of changes in equity, where it will reconcile the opening balances of equity with the closing balance of the equity at the end of accounting period. Okay, so whatever the reason for changes will be disclosed here, whether you have issued fresh equity shares or whether you have buyback your old issued equity shares. Then we have studied non-financial reporting, that all the reports which are non-financial nature in going to be recorded here, like ESG report and other CSR reports. Then we have studied in detail about the uses of financial information or financial statement, where we have discussed there are two broad categories of the user. First one is internal stakeholders, second one is external stakeholders. Who are internal stakeholders? Who are involved in the day-to-day operation of the business or company. Who are involved in the day-to-day operation of the business are called internal stakeholder. Who are they? They are business owner, they are investor, they are employee of the company. And we have also given why they are interested in the financial statement and hence they become the user of financial statement. Then we have studied who are the external stakeholder. They are those person who are not involved in the day-to-day operation of the business. They are prospective investor who is going to invest in your business. Then they are customer who are also in the line of business, who purchase things from you and who take services from you. Then supplier, then government and local authorities and agencies, then external lenders who have given money to you, then auditors like CA, ACCAs, because they will use your financial statement to conduct the audit, and last public. So the companies in which publics are interested are need to disclose their financial in the public. Then we have studied types of business entities. So there are three major types of business entity. First one is sole proprietorship, second one is partnership firm, and third one is limited liability company. We have discussed all these topics in detail, where sole trader is a person who is an individual, individual like me and you, not a company, not a firm, not a association, not a group of people. So it is an individual who owns, control and run things business alone. He can employ person, but he will be the only owner. He can sold the business as a going concern because he is the only one, so he does not need to take permission from anyone. So he can sold the business as a going concern. There is no legal distinction between his asset and his business assets. So if business has some liability, so his personal assets can also be used to pay back that liability. So hence it becomes the unlimited liability of the sole proprietor or sole trader. So there is no legal distinction between his personal asset and his business asset. Then we have studied partnership firm. So partnership is where at least two or more people come together with the aim to earn a profit. Means if I want to form a partnership firm, I cannot form the partnership firm alone. I need at least one more person to become the at least two person who are going to be partner in that partnership firm. So there should be at least two people, and there can be many people in the partnership form of business. Partners are jointly and severally liable. So both the partners are liable for each other's conduct. So I cannot say that my other partner has incurred some liability, so I am not going to repay it. It is not my liability. It is both liability of both me and my partner. Unlimited exposure to debts and equity. So partners are unlimited exposure to debts and liabilities. Suppose if the firm has more liability than the assets, so partners' personal assets can also be used to pay back their liabilities and obligations. There is no perpetual succession in the partnership firm. So suppose if there are two partners and one partner dies or retires, then partnership will comes to end because there is no perpetual succession. So incoming and going out of partners affect the succession of the firm. Partnership firms are not required to publish their financial statement because only companies are required to publish their financial statement into the public. So they are not required to publish their financial statement like limited liabilities company. Then last we have studied what is limited liability company. So limited liability company is a separate legal entity. So limited liability company is a separate legal entity. So Reliance is separate person in the eye of law, and Mukesh Ambani is a separate person in the eye of law. This is a separate legal person with his own rights. So Reliance has its own right, Mukesh Ambani has his own right. So Reliance is a separate person as compared to the Mukesh Ambani. Separate from its owner, a LLC may be a private or a public limited company. So Reliance is a public limited company because it is listed in the stock market. But any private limited company which has a word private in its name is called private limited company. Ownership in LLC or limited liability company can easily be transferred in part or a full, because who are going to be the owner of the company? These shareholders. Shareholders are the owner of the company. The shareholder can easily transfer their share to another person in part or in full. So this is what we have studied till yesterday. Okay. Now let's start solving the question, and we'll conclude this chapter today only, and we'll start with the fresh new chapters tomorrow. So we have done question number 1 in yesterday class only. Now comes to question number 2. Which of the following statement about sole trader is true? Which of the following statement about sole trader is true? So we have to identify which statement is true. Statement number A. A sole trader can vote themselves a dividend as a form of payment. Can sole trader vote themselves as a dividend in form of payment? What is dividend? Dividend is a share of profit. Dividend is a share of profit by the company. So it is only applicable to company. It is only applicable to company and not sole trader. So there is no question of dividend in the case of sole proprietorship or partnership firm. So this option is incorrect because there is no dividend in case of sole proprietorship form of business. Then statement number B. There is a legal distinction between the owner's asset and the asset of the business. There is a legal distinction between owner's asset and asset of the business. If we comes to our notes, I have highlighted this part as there is no legal distinction. What I have highlighted, if I just use if I use the eraser and remove all the highlighted part, then what have I highlighted? There is no legal distinction between owner's asset and asset of the business in form of sole trader form. So there is a legal distinction. So statement is saying there is a legal distinction, but we have stated there is no legal distinction between the owner's asset and asset of the business. So this statement is also false. So both the statements are false. first one and second one, A and B. Then comes statement C, where the business can be sold as a going concern by its owner. So yes, sole trader business can be sold as a going concern by its owner. So this statement is true. Then we will read also statement number D. Sole trader cannot employ anyone else to do work. But we have studied what? A sole trader may employ. A sole trader may employ people. So it is allowed to employ people, and statement is saying it is not allowed. So this statement is also wrong. So statement A, B and D are wrong, and correct answer is statement number C. So this is your correct answer. I hope after reading the notes, the question will become more easy for you to solve. Then comes question number 3. Identify which of the following statement are advantages and which are disadvantages of being in a partnership compared with the setting up a limited liability company. So what we have to tell? We have to tell what are the advantages and disadvantages of being in a partnership form of a business as compared to the company. So suppose if you are in a partnership, so you have to tell what are the disadvantages and disadvantages of being in a partnership as compared to forming a company. So here are certain cases A, B, C and D, and there are options which we have to choose, and whether this is an advantage and whether these are the disadvantage of the partnership form of business as compared to the company. Okay. So statement A. Inventory balances are readily available. So suppose if you are in a partnership form of a business and you have inventory balance readily available, because you don't have to work on the data and you have the data available anytime you want. So is this your advantage or disadvantage? It is advantage in any form. If you have any data available readily without doing any effort, then it is an advantage for you. So this is a advantage. Okay, this is a very general statement where you don't even have to think more, because if any data is available, this is in any time a advantage as compared to the disadvantage. Then we comes to statement number B. Partners are jointly and separately liable. So is this an advantage or disadvantage? This is a disadvantage, because suppose if I I have a partner, my partner do certain things which becomes the liability of the firm. So I will also become the liable for that liability. So this is not an advantage, this is disadvantage, because in company form of a business, the owners and company are a separate legal entity. So whatever the liability company has incurred, it is the liability of company only. My personal asset cannot be used to repay the liabilities of the company. So this is a disadvantage in partnership form of a business and advantage in company form of a business. So this is going to be my disadvantage. Okay. Now comes to statement number C. No perpetual succession means if a partner dies, the firms will get seized, because if there are two partner and one partner dies, the firms will become a sole proprietorship automatically, because you need at least two people. Or suppose if there are many partners and one of the major partner dies, the firm will cease to exist because of that person who is responsible for the conduct of the firm. So there is no perpetual succession in a partnership form of a business. There is only a perpetual succession in case of a company, not in case of a partnership, not in case of a sole trader. So this is also a disadvantage, that your business cannot work without you. Then comes statement number D. Financial information is given only to tax authorities and lenders. So suppose if I am in a partnership form of a business and I have to give my financial statement to government and to creditors from whom I have taken loan. Okay, when lenders say, lenders means bank and financial institution also. Suppose if I have taken some loan from State Bank of India or HDFC, so I have to submit my financial statement to them also, because they have given me loan. So I have to do the compliance of submitting the financial information. So financial information is only given to government government and lenders. So it is my advantage or disadvantage? It is my advantage, because I don't have to give my financial statement to public. Company need to give financial statement to government also, lenders also, and public also, but partnership is only required to give their financial information and financial statement to government and lenders. So it is going to be your advantage and not disadvantage, because you don't have to submit your financial statement to public. So this is your advantage. Okay, so if you look, so statement A is advantage, statement B is disadvantage, statement C is disadvantage, statement D is advantage. So your correct option should be option number not A, not B, and yes, definitely C. So C is going to be your answer, where statement A is advantage, B and C are disadvantage, and again D is your advantage. So correct answer is option number D. Okay, now comes to question number 4. We have done question number 4. Okay, which two of the following statement might be used to define the term financial reporting? So we have the correct answer B and C, because it records all the transaction of a business and summarizing the financial performance and position of a business. Okay, so option number B and C are correct in question number 4. Then question number 5. We have done question number 5 also in the class. Then comes question number 6. We have already done question number 6. Now comes question number 7. Okay, so what is question number 7 is saying? For each statement, select whether it is applicable to LLC means company. It is applicable to LLC means company, or to a sole proprietorship or partnership So you have to tell which statement is more suitable for either company, either partnership, or a sole proprietorship. Okay, so you have following statement given A, B, C, and D, and again you have to choose which option is more suitable from the given option. Okay, so first, owner takes full responsibility. First, owner takes drawing from the business. So in which type of business entity owners drawings take drawings from the business? In company, in sole tradership, or in a partnership? In which form of a business owners draws money from the business? In sole trader also, in partnership also, because there is no legal distinction between their asset and business asset. So in case of both sole trader or sole proprietorship and partnership, the owners of the or the partners of the firm take out the drawings. This drawings is not allowed in company form of a business, because company is separate and owners is separate. So only in sole trader and partnership the drawings of the money is allowed. Okay, so the answer of statement number A is sole proprietor and partnership. Then statement B, business has a separate legal entity. Business has a separate legal entity. Sole proprietor is not separate from its owner. Partnership is also not separate from its owner. Only company form of a business has a separate legal entity. So it is going to be applicable to company only. It is going to be applicable to company only. Okay. So statement B is regarding the companies, or you can say LLC, or you can say LLC, limited liability company. Then comes option C. Statement C. Owners of the business can be separate from those running the business. Owners of the business can be separate from those running the business. So, in which case there is going to be a separate owner? In which case they are going to be a separate owner from its business? Only in company form of a business. Only in company form of a business. So, answer for this is also company or LLC, limited liability company. So only company is separate from its owners. Okay. Now, last but not the least, statement number D. Ownership can be easily transferred in part or a full. Where where is ownership is easily transferable? In part or a full. Focus on the word in part or in full. In sole tradership, you can only transfer the ownership in full as a going concern, but in only company form of a business you can transfer the ownership in part or a full. You can sell some of your share and not fully share also, and you can also sell full share of yours. So only in company form of a business partnership in only a company form of business, ownership can be easily transferred either in part or in full. So the answer of this is also company or LLC. The answer of this is also company or LLC. So statement A is regarding sole trader or partnership, and statement B is regarding company, statement C is regarding company, statement D is also regarding the company. So your correct answer is supposed to be like this. So let's start assessing option number A, where option number A is saying option statement number A is related to the sole proprietor partnership. So okay, this is correct. Statement B is limited to company. Okay, this is also correct. Statement C is regarding sole trader or partnership. So no, this statement is not correct because statement number C is regarding the company. Then comes statement D, where answer is limited liability company. So option number A is wrong because in option number C, in statement number C, they have chosen the correct answer. Now let's start assessing statement option number B, where statement A is regarding the sole trader or partnership. So okay, this is correct. Statement B is regarding the company. Okay, this is also correct. Statement C is regarding again the company, and statement D is also again regarding the company. So option number D is correct as per our answer. So for a correct answer as of now is statement B. Now comes to option number C, because we have to assess all the options. You cannot just stop after solving some option, you have to check all the options. So now option C, where statement A is regarding sole trader or partnership. Okay, correct. Then statement B is regarding company. Okay. Then statement C is saying again sole trader or partnership. So this is wrong. And statement D, sole trader or partnership. So statement D is also incorrect. So option number C is incorrect. Now check option D. Statement A regarding cash flow. No, this is wrong. Statement B regarding statement of financial position. This is also wrong. And this is profit and loss. So statement D is altogether wrong. So this is not correct. This is not correct. This is not correct. The correct option is statement. Correct option is option number B, where statements are as per our answer. Correct answer is option number B. You are going to face these kind of question only because these are taken from the ACCA study hub. Okay, now let's come to question number 8. Okay, I think I have given you some homework. Is this question number 8 which was homework? I think so. Okay, Cheng in Cheng in Yui are in a partnership together. So there are 3 partners in a firm. You can for a short say C, Y and Y, U. There are 3 partners C, Y and Y, U. Their business has been very successful, but now Cheng wishes to reduce his input and have the option to sell part of his share of the partnership. Okay, so what the statement saying? Their business has been very successful, and but now Cheng means C wishes to reduce his input because he does not want to work more. He wants to reduce his input and have the option to sell or part of his share of the partnership. So what is this? This is a partnership form of a business. As of now, the statement saying. So in a partnership, there are 3 people, Cheng, In and Yui. Now Cheng wants to reduce his input and can have the option to sell part of his share of the partnership. Yin and Yui wish for the business to continue operating and also have the children that they wish to include within their business venture. So the remaining partners, which are Ying and Yun, wants to run this business and wants to continue this business, and they also have the children and they want their children to come in the business and work also. However, they do not want their children to be personally liable for the debts of the company. However, they don't want their children to be personally liable for the debts of the company. So they don't want their children to get exposed to the unlimited liability, because what we have studied in our notes, that partnership form of a business, partners has unlimited exposure to the debts and liabilities of the business. So Yen and Yin does not want their children to have the unlimited liability, or does not want their personally liable for the debts and obligation of the business. So they don't want unlimited liabilities. Okay. So I think there is some part missing in the question. The question says which option to choose, which form of a business to choose from. Okay, so what is their condition? They don't want their children to have the unlimited liability. They don't want their children to have the unlimited liability. So in sole trader you have unlimited liability, in partnership you have unlimited liability, only in company form of a business you don't have a unlimited liability. Okay, so what is their correct answer? Their correct answer should be to have a company. Now let's start reading the option. Option A, continue with the partnership but negotiate a new profit sharing ratio agreement to reflect change in reduction in the input. Okay, you can have the partnership running and change the profit sharing ratio, but you cannot mitigate the risk of unlimited liability in a partnership form of a business. So their primary concern, they do not want their children to be personally liable, is not defeated here. So this is not a correct option, because in partnership form of a business you have the unlimited liability. Then comes option number B, where dissolve the partnership and set up a new partnership with Yen and Yui. Either if even if you dissolve the old partnership and set up a new partnership, your liability does not get, and there you still have the unlimited liability in new partnership form also. So this option is also not correct. Then option C, dissolve the partnership and set up a new partnership with Yen and Yu and other family member. Even after including other family member, your personal liabilities, your personal assets are still be used to pay back the obligation debts of the business. You are still have the unlimited liabilities. So this option is also incorrect, because their primary concern that their children should not be personally liable for the debts of the business is still not met. Then comes option number D. Set up a limited liability company with Yang, Yin and you as a shareholder. So if they set up a new business entity with the form of company, they have the limited liability, because company is a separate legal person and the owners are separate. So there are no case of unlimited liability. So this option is the most suitable option for them. So answer of question number 8 is option number D. Okay, so this is one of the good question that you have, where you need to assess all the possibilities in the question. Okay, so star mark this question. Now comes to question number 9. Okay, which two of the following statement describe the scope of financial reporting? You have to tell which of the two following statement describe the scope of financial reporting. You have to choose the correct two statement which are correct. Okay, now comes to statement A. It provides a purely qualitative analysis of the company's performance. Does financial reporting provides you the qualitative performance or qualitative analysis of the company performance? No, this does not provide the qualitative analysis. It provides the quantitative analysis, not qualitative. Qualitative has more non-financial data as compared to quantitative. So the financial reporting deals only with the financial data and historical information. It does not talk about the future prediction and upcoming events. So there is no qualitative analysis. There is only a quantitative analysis. Okay, so there is only a quantitative and not a qualitative analysis in the financial reporting. So this option is not correct. If they have written quantitative analysis, then to this answer is will be correct. Okay, this option is not correct because it does not provide qualitative analysis. Now check statement B. It provides a forecast of future result. So financial reporting, as I have again said, only deals with the historical information. Financial reporting only deals with the historical information. It does not provide you about the any information regarding future coming events and future results. So this option is also incorrect. This option is also incorrect. Then comes option C. It provides a record of the company's past performance. Does financial reporting provides you the information about the past performance? Yes, because it again only deals with the historical information. It only deals with the historical information. So this option is correct. This option is correct. Okay. Now check option D. It provides quantitative information regarding all companies' asset. So what is option D? It provides quantitative information regarding all companies' assets. So now you will say, sir, now the word quantitative has appeared. So this option is correct because you have said company does not provide qualitative analysis but only provides quantitative. So now I have read quantitative. So now this option is correct. But you have to check again what the statement is actually saying. Statement is saying it provides quantitative information regarding all asset of all companies asset, regarding all company assets. So this word all is very important. This word all is very important because when you say all, you also include those assets which is not recorded in the books. You include all asset which is not recorded in the books, like goodwill. You have not recorded goodwill because your business is still running. Goodwill is an intangible asset which is not shown in the business. So suppose if you have some kind of a goodwill which is not recorded in the book, so this all will include that also. So financial reporting does not include all assets. It includes the asset of the company, but when you say all, it gives the much larger much more larger or broader view. So it does not include all, like goodwill and some intangible assets which are still in construction or which are still in development, which is not yet recorded in the book. So this option is not correct when because it includes all assets. If the word all was not there, we will consider this option as correct. Okay. So this is also a good question where you have to think about all these things in detail. Then comes option E. It provides qualitative and quantitative information regarding the company's position. Okay, so it just says qualitative, quantitative information regarding company's position. So this option is correct. Why, sir? Because you have said that only quantitative information is given. But when I say qualitative, so qualitative include non-financial reporting also. Qualitative include non-financial reporting also. So option C and option E are correct. Option C and option E are correct. Other options are not correct because option A and option B are by prima facie are wrong, and option D is wrong because it talks about all assets of the company. That's why option D is incorrect. So correct answer is answer A and answer correct option is option C and option E. Okay. So mark this question as also important. Question 8 and question 9 where you have to think beyond the text. Okay. It has to be read between the lines because each and important word has a important part to play in the deciding the correct answer. Now comes question number 10. For which of the stakeholder listed below identify whether their primary concern is the level of profit made by the company or level of cash and liquid asset held by the company. So we have to tell which stakeholder listed below they are interested more in a profit of the company or in the cash asset held by the company. Okay, so you have to tell who is more interested about the profit, who is going to be more interested about the cash of the company. Okay, so we will discuss each option in detail. First, you have these stakeholder, and you have these option. Now comes first stakeholder, that is tax authorities. So when it comes to tax authority, who are tax authorities? Suppose like income tax department, suppose bad department. Okay, so what they want from you? They want from you the tax. They want from you is the tax. And in what the tax is charged? In what the tax is charged? The tax is calculated and charged on the profit. The tax is calculated and charged on the profit. Okay, so the tax department will be more interested in your profit as compared to the cash because their primary concern is whether you are paying correct or actual tax or not. So income tax authorities or tax authorities are going to be more interested in the profit or not in cash. Okay, so what is their primary concern? Says about the primary concern. They may be interested in your cash also, but what is their first and primary concern is your profit. Okay, then comes supplier. Then comes supplier. Now, suppose if you have purchased some goods or rendered some service from your supplier. Now, supplier wants what? Money from you. Supplier wants what? Money from you. So, what is will be his primary concern? Whether you have sufficient cash in your asset or not. Whether you have sufficient liquid cash in your asset or not. So, he will be more concerned about your cash and liquidity as compared to the profit. As compared to the profit, he may be concerned about your profit, whether you are making profit or not, but he will be more interested about your cash, whether you will be able to repay his money or not. So correct answer for this will be cash. Correct answer for this will be cash. Okay, there means we are talking about the primary concern. We are talking about the primary concern. So what will be their first concern? Whether profit, either cash. Okay, now comes stakeholder C, bank. So suppose if you have, when we say bank, so it is was about banks who has given you the money, who have given you the money, who have given you the CC, and who have given you the overdraft facility. So that bank will be more interested in your liquidity and like whether you have sufficient cash or not. So bank will be more concerned about your cash, not as compared to the profit. So correct answer for this stakeholder will also be cash, not profit, because you may be incurring loss, but you may have a sufficient amount of cash. So their first concern and primary concern is about the cash. There may be cases where you will be having profit, but you don't have a liquid cash to repay the bank. So their first concern will be whether you are able to pay back to the bank or not. So the correct answer will be cash. Now comes stakeholder D, lenders who have given you the money other than bank. Okay, so who have given you money other than bank are called lenders, like financial institution or small banking companies and finance companies. Okay, so whether they are going to be more interested in your profit or cash, they are again going to be more interested in my cash, because I have to pay their money back, because they need my money from me, so they will be more interested in my cash. So correct answer will be profit for tax authorities, cash for supplier, cash for bank, and cash for lender. This is going to be the correct answer for my following stakeholder. Okay, now let's start checking the option. Option A, first one is profit, correct. Second one is profit, wrong. Third one is cash, correct. Fourth one is cash, correct. So option number A is incorrect, because in this statement B or stakeholder B is answer is incorrect. Then comes to option B. Statement A, profit. Statement B, profit, no. Statement C, cash, yes. Statement D, profit, no. Then comes option C. Statement A, profit, correct. Statement B, cash, correct. Statement C, cash, correct. Statement D, profit, not correct. Okay, so option number A is incorrect, B is incorrect, C is incorrect. Now only option left is option D, where statement A is regarding profit, stakeholder B is regarding cash, statement C is regarding cash, statement D is regarding cash. So as per our answer also, statement D is correct, where tax authorities will be interested in my profit, because they want income tax that will be calculated on my profit. They need GST, they need VAT, which is going to be calculated on my profit. And option and stakeholder B, C, and D, that are supplier, banks, and lenders, are will be more interested. Their primary concern will be my cash and not my profit. So option number D is correct, and option number A, B, C are incorrect. Okay, now we have question number 11. Okay, we have question number 11, where the state question is saying Jay has his own sole trader business. Jay is a person who has his own sole trader business. So Jay is an individual who has own sole trader business. He is keen for his son to follow in his footsteps, and when he retires, he wishes to hand the business over to them. Full stop. He has been successful in his work and wants to protect his personal asset from third party. So now in this question also, in previous question, question number 8, where three people are in a partnership and Cheng, Hui, and Yui where Chang was going to retire, and we wants their children to come on their partnership, but does not want their liabilities. They does not want them personally liable for the obligation of the firm. In this case also, Jay wants his son to come for the business which is in a sole trader form of a business, and he wants to protect his personal assets from the third party. He wants to protect his son personal asset from the third party. Jay has sought your advice. So Jay wants our advice. Which one of the following best meets Jay's required? So what Jay wants? Jay wants that his son will join his sole trader business when he retires, but he wants to protect his son's personal asset from the third party. So we have know that so in sole trader or in partnership form of a business, there is going to be a unlimited liability, but only in a company form of a business, the liability is going to be limited because this like company is a separate legal entity and owners are separate legal entity. Okay, so option A, remain a sole trader. This is not a correct advice because in sole trader there is going to be a unlimited liability because there is a no legal distinction between companies and asset and sorry, there is no legal distinction between business asset and the owner's asset. So being remaining in a sole trader is not a good advice. Then option B, undertake a partnership agreement with his son. Even if he goes within a partnership with his son, when Jay and his son are going to be partner, they both have unlimited liability. There is no going to be a separate legal entity between partnership and its owner. So uh, partners will have unlimited exposure to the debts and obligation of the firm. So this is also a incorrect answer. Then option C, set up a limited liability company. So if they set up a limited liability company, they will have protected the personal asset of his son and his own. So in company there is a separate legal entity. So their personal assets are not going to be used to repay the obligation and debts of the company. So option C is correct. Now option D, employ his son in his sole trade business. Even if he employ his son in his business, who is going to be the sole trader? Jay. Jay and his son will be the employee of this business. So Jay will have unlimited liability, and after Jay retires, his son will become the sole trader because he is going to take over the charge. So his son will also get exposed to the unlimited liability. So option D is also incorrect. So correct answer is option number C. The correct answer is option number C. Okay. So till now we have solved 11 question, and what total question do we have? Question number 19. So we have only 10 questions left. We will take a 2-3 minutes break and then we'll start again. Okay, so let's have a break and we will start again in a 2 or 3 minutes. Okay. Okay, so let's welcome again. We will going to solve remaining question of this chapter and we'll complete this chapter today only in 3 classes. Okay. So question number 12. From the following list, what are the two disadvantages of being operating as a partnership compared with the limited liability company? So you have to tell about the two disadvantages of being in a partnership as compared to the company. We have already discussed this kind of question in previous also. So this is a type of trend that ACCA asks you again and again, where you need to discuss advantages and disadvantages of being in a partnership from as compared to the limited liabilities company. Okay. So now start checking the options. A. Change of ownership is more difficult. Where the change of ownership is more difficult? In company form or in a partnership form? In a partnership form and not in a company form, because in a company it is easy to transfer their ownership in part or a full. So in partnership form of a business, the change of ownership is more difficult. So this is a disadvantage. This is a disadvantage in partnership form of a business as compared to company. Okay. Then option B, financial statement must be made available for public scrutiny. Does partnership require to publish their financial statement to public? No, partnership are not required. Only companies are required. So this is disadvantage in company form of business and not in a partnership form of a business. So for partnership, this is a advantage. For partnership, this is a advantage. Now option C, personal asset are as risk. So where personal asset will become at risk? In company form or in a partnership form? In a partnership form of a business, because their liabilities are unlimited and there are owners and business are not separate. So in partnership, this is a disadvantage. So in partnership form of a business, this is a disadvantage. Okay. Then comes option D. Partnership are restricted to 4 owners. Does partnership is only restricted to have 4 owners? No, there is no such restriction. There is no such restriction. So this is not a disadvantage. There is not a disadvantage. The statement is altogether a false statement. Okay. So we have to tell what are the two disadvantages. So option A is a disadvantage in a partnership form of a business, and option number C is a disadvantage. So correct answer is option number A and option number C. These are the two disadvantages of being in a partnership form of a business as compared to the company form of a business. Okay. Now comes to question number 13. From the following list, what are the two disadvantages of operating as a partnership compared with the limited liability company? Again, now you have to tell again the two disadvantages of being in a partnership as compared to the company. So you can see the trend that ACCA regularly asks this type of a question to check your assessment, and thinking. Now, you have following statement and you have the following option. You have to check each statement with the given option whether they are the advantages or disadvantages of being in a partnership as compared to the company form of business entity. Now, statement A, the owner is wholly liable for the debts of the business. The owner is wholly liable for the debts of the business. So, is this going to be a disadvantages or disadvantage for the partnership? This is disadvantage because partner's personal asset will also be used to repay the debt. So, this is going to be a disadvantage. This is going to be disadvantage. Then comes statement B. The business will set up article of association, or you can say AOA. You can also say it AOA to define its constitution. So company is a separate form of a business as compared to the owner. Company is a separate form of a business. Company has a separate constitution which is defined in the article of association. Only company has a separate constitution which is defined in the article of association. So it is only applicable in the company form of a business, not in a partnership. So is this going to be disadvantage for a partnership? No, this is not going to be disadvantage because it is not required for the partnership. So this is not a disadvantage. It is a false statement if you look at the point of view of a partnership firm. Then statement C. where the asset of the business form part of the owner's estate on death. What this statement saying? Statement saying the asset of the business forms part of the owner's estate on death. Means if a partnership firm in a partnership firm, if partners die, so the asset which the firm has become part of the owner's estate, because they are ultimately going to be the owner and there is no separate legal distinction between the partners and their firm. Only in company form of a business you have the separate legal entity. So this is going to be disadvantage. This is going to be disadvantage as compared to company form of a business, because in company form of a business you have the perpetual succession. So either shareholder came or they left, this does not affect the perpetual succession of the company. So this is disadvantage if you look at the point of view of being in a company form of a business. So this is a disadvantage. This is a disadvantage. Okay. So this in this question, this statement is also very important for you, because in exams you might get confused why this is a disadvantage. So because if you think as a company, suppose you have a company and the owners die, so it will become only the asset of the company only, because company is a separate legal entity. But in a partnership form, it becomes the owner's estate, is become the part of the owner's estate. You don't want your firms, you do not want your business asset to become the part of the to become the part of the owner's asset, because you want your business to run successfully as a perpetual succession. So this is hence become the disadvantage in a partnership form of a business. Okay, so mark this point as a important. Then option statement D, the business may can borrow money on its own name. So can can a partnership borrow money in its own name? Thus, partnership is a separate legal entity. Partnership can borrow money in its own name. Suppose I am a and I and my friend B forms a partnership firm in the name of A and B Associates Limited. A and B Associates. Okay, we have a partnership in the name of A and B Associates. Suppose we have taken some loan from State Bank of India in the name of A and B Associates. So even I know that that loan is in the name of the firm, who is ultimately going to repay that? Who is ultimately going to suffer that liability? Me and my partner, because we are unlimited exposed to the we are going to unlimited exposed to the debts and obligation of the firm. So this is a disadvantage. This is a disadvantage. This is a disadvantage because this is going to be ultimately going to be paid by me. This is ultimately going to be paid by me. Okay. So hence your correct answer is disadvantage, disadvantage and disadvantage. So whatever option you have is going to be correct, where option A, C and D talks about the disadvantages. Okay. So this is true, and this A is also true. In this A is also true, C is true here, C is true here also, and D is true here. So correct option is option number C. Correct option is option number C. Okay. So mark this question is important, because these are the questions which might need some of your attention and discussion. Okay. Now question number 14. Now question number 14, where state whether each of the following statement concerning the purpose of concerning the purpose of statement of financial position is true or false. So we have to tell what are the statement where statement is true or false as in the light of statement of financial position, that is balance sheet or SOFP, that is balance sheet or SOFP. Okay. So statement A, the statement of financial position shows the asset liability data business had during the 12 months accounting period. Data business had during 10 months accounting periods. The statement of financial position shows the asset and liability data business had during the 12 months accounting period. Is this true or false? Is this true or false? This is not true. This is false. Why? Because statement of financial position, either you can say balance sheet, only shows you the position of asset and liabilities on a particular date, and not on a during the 12 months accounting period. So it does not show you the accounting period, accounting position or financial position during the 12-month accounting period. Only shows you the position as on a date, as on a particular date. So this statement is false and not true. Then comes statement B. A statement of financial position attempt to show the market value of the business as a whole. Does your statement of financial position shows you the market value? Yes or no? Check on the notes, where we have discussed that statement of financial position, it shows the carrying amount of the entity. What it shows? It shows the carrying amount of the entity at a particular date. So it talks about the carrying amount and not about the market value. There may be some other market value running on the market, and there may be some other value showing in the books, and that which is called as carrying amount. So statement of financial position shows the value as a carrying amount and not in a market value. So this statement is also false. Okay, so both statement A and B are false in the context and in the lights of the statement of financial position. So your correct option should be where both the options are false. So option number A is correct because both are false, and in option B, C, D, either one is true, either one is false. So these all options are wrong. Only option number A is correct. Only option number A is correct. Okay. Now comes to question number 15. Now comes to question number 15. State whether the following statement about the disadvantages of a limited liability companies are true or false. So now we have to tell about the disadvantages of being in a company form of a business. Okay. Statement A. Financial statements are available for interested parties to view, which means a loss of privacy over over the financial information, where it is required to show your or disclose your public information, financial information and financial statement to public only in company form of a business, and hence it become an advantage if you look at the partnership or sole proprietor, where you don't have to submit your financial information or financial statement to public. So this is a disadvantage if you look at the point of view of a company. So this is disadvantage, and what we have to tell the statement which are disadvantage in a company form of a business. So this is a disadvantage. This is a disadvantage for a company. Then we see statement B. Control may be held by the someone who does not take part in the day-to-day activities of the business, of the company or of the business. Control may be held by someone who does not take part in the day-to-day business of the company. Suppose if I am the shareholder of a Reliance, suppose I am the shareholder of a Reliance Limited, and I do not take part in their day-to-day business. I don't know what they do. I don't know how they do things in their day-to-day working. But still, I am the shareholder, so I am the owner. So, is this a disadvantage or advantage in a company form of a business? This is a disadvantage because owners does not take part in the day-to-day business, or the owner may be someone who is not involved in the day-to-day business of the company. So this is also a disadvantage. This is also a disadvantage. So correct option will be these, both the statement A and B are disadvantage. So now start checking the option. Option A, statement A is false, statement B is false. This is not false, this is true because this is the advantage. The question wants us to check whether these are the disadvantages or not. So this is disadvantage. So option A is incorrect because this is not false, this is true. They are disadvantage of being in a liability form, like unlimited liability form of a business. Option B, statement A is true, statement B is false. No, this option is not correct. Both statements are true. Option number C, statement A is false. No, statement B is true. Yes, still the option is incorrect because both statement wants to be true. Option number D, statement A is true, statement B is true. So hence correct answer will be option B, where both the statement are disadvantages of being in a liability form of a limited liability form of a company. Okay. Question 16. Now we only have 4 questions left, 16, 17, 18, 19. Then we will done with all the questions related to this chapter, and then we only have few topics which is about to reading. So we will end this chapter quickly. Question number 16. Bridge company is a rival company to river company. So there are two companies, bridge company and river company, which is rival to each other. So they are in a competition. Okay. Which one piece of financial information? Which one piece of financial information from Rivers Company financial information is Bridge Company's likely to pay most likely to pay the most attention to each year? So you have to tell which is one item which River Company financial statement is Bridge Company's more interested part. So you have to tell the bridge company is interested in what. So you have to tell the bridge company who bridge company is going to be interested in what item in the financial information of the river company. Okay. So there are two rival company, bridge company and river company. So you have following option, you have to choose which is the most appropriate answer in which the other company is more interested. Okay. Option A, amount of trade receivable. The company will not be that much interested in knowing the amount of trade receivable of their rival company because it does not affect them. It does not affect them. So this option is not more appropriate if you look at the point of view. Then comes option B, amount of long-term debt. Other company may be interested in knowing your long-term debt and knowing your debt's liability, but it is still not a most appropriate answer. We are still assessing the option. Okay. So first we will read all the option, then we will see which is the most appropriate answer in which the other company is more interested in knowing the about the other company's financial information. Option C, amount of non-current asset that are fixed asset. Okay. So company might be interested, but we still have to check other option also. Option D, gross profit percentage, that is margin, which is also called as margin. So other company is going to be interested in knowing the margin of the his rival company because they are in a competition. So their competition is about how much to earn on their cost and how much margin to charge. So company might be interested in knowing all this information. Company might be interested in knowing all this information about their rival company, but the most appropriate answer should be the gross percentage, margin, because it is the most important part for them to know how much the other company is making, how much the margin they are taking out from the sales. So this is going to be the most appropriate, and you have to choose only one piece. You have to choose only one piece of financial information. So option number D, that is profit percentage margin, is the most suitable answer for this question. So correct answer will be option number D. Correct answer will be option number D. Now question number 17. There are number of legal framework features that a partnership encountered. What are the following statement regarding partnership is true or false? So we have to tell which statement is true or false in case of a partnership firm. We have to tell which statement are true or false in case of a partnership firm. Of statement A, partners exposure to debts and liabilities are unlimited. Is this true for a partnership firm? Yes, this is true because in partnership form of a business, partners are exposed to unlimited debts and liabilities. Then comes statement B. A partnership financial statement must be made publicly available. Does partnership firm is required to publish their financial statement? Does partnership is required to publish their financial statement? No. So this is a false statement. So the correct answer will be where statement A is true, statement B is false. Okay. Now check out the option. Option A, statement A is false, not correct. Statement B is false, correct. Okay. So this is incorrect because in this one statement is has a wrong answer. So this is a wrong option. Then comes option B, where first statement, that is partners exposed to debts and liabilities is unlimited, is true. And statement B, a partnership financial statement must be made publicly available, is false. This option is correct. This option is correct. Also we will check other option also where Statement A is false, not correct. Statement B is true, not correct. Option D, statement A is true, statement B is true. This is also not correct. So only correct answer is option number B, where statement A is true, statement B is false. Okay. So now only two questions are left. Question number 18. Which of the following are features of any partnership? Which of the following are the features of a partnership? So we have to check which are the correct feature. Only one. Option A, owners management, joint liability. Is this the case in the partnership? Yes. The owners are going to manage the partnership and are jointly liable. So yes, this is correct. Okay. Let's check out other option also. Limited liability, owners management. This owners management part is correct, but this is not going to be a limited liability in a partnership. So this option is incorrect. Option C, separate legal entity, limited liability. There is no limited liability in a partnership. So this option is also incorrect. Option D, jointly liable, yes. Separate legal entity, no. So this is also a incorrect answer. So correct option will be option A, where owners management and jointly liable. Jointly liable. So correct option will be option A in question number 18. Now last question of this chapter. Now last question of this chapter. A business prepare a statement of profit or loss. A business prepare a statement of profit and loss. What we call it in a short, SPL. At the end of each accounting period, indicate whether the following statement are true or false with regard to the statement of profit or loss. So we have to tell which statement from these A, B, C, and D are true or false in the light of statement of profit or loss. Okay. Now, of statement A, the statement of profit or loss is prepared to reflect the position of the business on a particular date. So, is this the correct statement or not? This is not correct because it talks about the financial performance, not about the financial position. Statement of financial position talks about the statement of financial position talks about the position of a business, and statement of profit or loss talks about the performance of the business. So this statement is false. Also, it does not talk about a particular day. The statement of profit and loss will tell you about the entire accounting period or a limited accounting period, not regarding a particular date. Okay, so this statement is false. Now, statement B. The statement of profit or loss records the income and expenses of the business. Is this true or false? This is true because yes, the statement of profit or loss records the income and expenses. This statement is true. Then comes statement C. The statement of profit or loss records the investment of the owners of the business. Thus, this statement is true or false? This is false because statement of financial position shows you the equity and owner's capital. Will show you the equity and owner's capital. Statement of profit or loss does not talk about or show you or disclose you the investment of the owner. So this statement is false, not correct. Okay. Now, last statement, the statement of profit or loss is prepared on the accrual basis. The statement of profit or loss is prepared on the accrual basis. Yes, this is prepared on the accrual basis where you record your upcoming expenses also, or the expenses which you have, sorry, it will also record the expenses which you have paid and not yet incurred, and the expenses which is incurred and not yet paid. Hence it is called accrual basis system and not a cash basis system. So statement of profit or loss records the and prepared on the accrual basis. So this statement is true. So correct answer will be where statement A is false, B is true, C is false, and D is true. So let's check which option is fits the most. Option A, statement A is false. Yes. Statement B is true. Yes. Statement C is false. Yes. Statement D is true. Yes. So as of now, statement option number A looks good. Now option B. Statement A is true. No, this is not. Statement B is true. Statement B is false. No, this is not because it is true. Statement B is false. Yes. Statement D is true. Yes. So in option B there are two wrong answers. So this is not an answer. Option C. Statement A is true. No. Statement B is false. No. Statement C is false. No. Statement D is true. Yes. So this has only one correct answer. So this is not also a not correct option. Now option D. Statement A true. No. Statement B true. No. False. No. Statement C true. No. Statement D false. No. So statement option number D is also incorrect. So correct option is option number A, where statement A, B, C, E, and D are as what we have discussed. Okay. So this is, so I'll write it again. Correct answer is A, where statement A is false, statement B is true, statement C is false, it does not talk about the owner's amount, and statement D is true because it is prepared on a accrual basis system. So this is the all the question related to the question chapter number 1 of your ACCA financial accounting. So if you have done this question and have read all the notes that I have given you, you will be easily able to solve all such questions in your exam. At last, I have given you the suggested answer regarding all the 19 questions discussed above. So you can check them also. Okay. So we are done with our questions of this chapter. Now look at the content of the chapter. You have financial reporting, statement, heading, and we have studied till now. Now the only topics left are accounting records, concept of business entity, governance, legal responsibility of the director, and that's all that we have left. And still we were able to solve all the questions which are in the ACCA study hub available for you. Okay, so let's take a 5 minutes break and we'll start the reading and understanding the remaining concept of this topics, and we'll finish this chapter. Okay, so let's start, have a 5 minutes break, and we will meet again. Okay, so let's start with the new topic, that is accounting record. What does it say? It says that in order to produce SPL, that is statement of profit or loss, and SOFP, statement of financial position, a business needs to keep a record of all the transaction. In order to produce statement of financial position or statement of profit or loss, that is financial statements, you need to keep a record of all the transaction. This process is called bookkeeping. Okay, so what we are studying? We are studying that in order to produce statement of financial position, if you want statement of financial position and statement of profit or loss, you need to keep record of all the transaction. You need to keep record of all the transactions. Okay, and this process means the process of recording the transactions is called bookkeeping. Bookkeeping is all and only about recording the transaction, is only and all about recording the transaction, and this process is called bookkeeping. Okay, what we are studying? We are studying accounting records. So in order to produce financial statement, that is statement of profit and loss or statement of financial position, a business needs to have a record of all the transaction, and this process is called bookkeeping. This recording of transaction is called bookkeeping. Accounting records should be complete, accurate. That means if I have done a transaction of rupees 10 or $10, it should be recorded as 10 and not 9 or 11. It should be accurate. It should be accurate and valid if information produced is to be useful for the use of financial information. So all the recording of transaction should be accurate and valid, because it will be used to produce information to be used in the used to produce information and useful for the preparation of financial information. Hence, the recording of all the transaction is called bookkeeping. The recording of all the transaction is called bookkeeping. Now, if I give you the entire summary of the process, then recording of all the transaction is called bookkeeping. Okay, so recording of all the transaction is called bookkeeping. What we do here? We record all the transaction. Okay, so this is a okay, so this is a one thing where you record all your transaction, which is called bookkeeping. Now, bookkeeping is a smaller term. Bookkeeping is a smaller term. The bigger term than bookkeeping is accounting. The bigger term than bookkeeping is accounting. And which accounting? Financial accounting. Which accounting? Financial accounting. So bookkeeping is a small term, financial accounting is a bigger term. Bookkeeping comes under financial accounting, and financial accounts covers bookkeeping. So recording the transaction is bookkeeping, analyzing, summarizing and classifying the transaction is called financial accounting. And then comes a more bigger picture, that is financial reporting. That is financial reporting, where you present your financial data in the form of financial performance and financial position. Okay, so bookkeeping, recording all the transaction, posting, classifying and summarizing the transaction is called financial accounting, and presenting that information in the form of financial statement is called financial reporting. So this is the complete overview of the topics, that if you record transaction, it will be smaller. If you do classification, summarizing, it will be more bigger than recording, and the entire process of classifying into the performance or position in the form of financial statement is the more larger and wider perspective of this all events. Okay, so this is the complete overview of the pictures. Now, 1 minute. Now, so this is all about the accounting records, where in order to produce a statement of financial position, or statement of profit or loss, you need to record all the transactions, which should be accurate and valid, because information is going to be used to produce all the data. Okay, so we have done with this topic. If you are going to prepare notes, draw this in your notebook, or else I am going to share this board notes with you also, so then you can refer anytime that. Now, concept of business entity, separate entity. We have discussed this lot more times when we were doing questions. So just give a read and you will be able to understand what is it saying. A business is considered to be a separate entity from its owner, and so the personal transaction of the owner should never be mixed with the business transactions. Suppose what is saying, it is a separate legal entity, so the personal transaction of the owner should not be mixed with the business transactions. Okay, up suppose I have purchased this Apple pencil to be used in my classes. Suppose this Apple pencil has been purchased by me to be used in the classes. My class is my business. My class is my business. So this is a business transaction. This is a business transaction. But suppose I have purchased a mobile phone to be used by my family. To be used by my family. So that purchase of mobile is my personal transaction. It is not a business transaction. If I purchase a mobile phone to be used in my classes, to be given to my staff, to be given to my associate, so that is a business transaction. But any mobile phone given to my family member will be my personal transaction. So I will not include that personal transaction in my business transaction. So this is a concept of separate business legal entity, where you separate your personal expenses, personal transaction with the business transactions. Okay. So this is the very simple concept of separate entity, and you might have understand when we were doing all the questions. Now comes the governance. Those charged with governance, which is also called TCWG in short, those charged with governance of a company are responsible for the preparation of financial statement. Okay, this is a two line but has a more bigger picture than this. You will understand and read about this a lot time in your AA and AAA examination. Okay, now suppose who are TCWG? Who are TCWG? TCWG means those charged with governance. They are the people or group of person. They are people or group of person like board of directors, like board of directors of a company or audit committee. What is board of directors and what is audit committee? You are going to study in your law examination. Okay, or audit committee, which are responsible, for the governance, They are responsible for management also, but apart from management, or even if they do not contribute for the management, they are responsible for the governance and responsible for preparation of financial statement. So who is going to be responsible? That financial statement need to be prepared accurately and correctly and valid. The people who are charged with the government, that are TCWG, those charged with governance. They can either be board of directors, they can either be audit committee, or they can either be people who are responsible for the preparation of financial position. Because suppose as an auditor, as a CA, as a ACCA, your job is not to prepare financial statement. Your job is never to prepare financial statement. Your job is to audit the financial statement. So suppose if I am the auditor of a Reliance, I am not going to go and prepare their financial statement. I am going to check their financial statement. So whose responsibility is this to prepare financial statement? It is the responsibility of people who are charged with the governance, or those charged with the governance. So TCWG is responsible for the preparation of financial statement. Hence, this topic text talks about that also in brief, that those charged with governance of a company are responsible for the preparation of financial statement. So if a MCQ comes to you in the examination that who are responsible for preparation of financial statement. So it is not owners, it is sorry, it is not auditors, it is not government, it is not professional, it is the people who are charged with the responsibility of the governance of the company, that are called those charged with governance or TCWG. Okay, so this is the topic regarding the governance. Now the last topic of this chapter, that is legal responsibility of the directors. So what are the legal responsibility of the directors, and who are directors? Directors are the people who run the company, who works for the company apart from the owners. Directors are the people who may be owners, but apart from owner they are involved in the day-to-day operation of the function of the and operation of the company. Directors has a duty to care to show reasonable competence and may have to indemnify the company against loss. So, what director needs to do? They have to show reasonable competence and indemnify the company against loss to save the company against the loss caused by their negligence. So, they should not do any act which caused loss to the company because of their negligence. So, they should not do negligence and show reasonable competence in doing all their act which might cause loss to the company. Directors are also said to be in the fiduciary position in relation to the company, which means they must act honestly in what they consider to be the best interest of the company and in good faith. So whatever decision, whatever policy directors made for the company need to be in the interest of the company. They are should not be made in the interest of the director. So suppose if I am the director of a company, so whatever the decision policy that I am going to make should be in the interest of the company and not should be the interest of me or my other directors. So whatever decision need to be taken should be taken on a reasonable competence, so that it might not give loss to the company and protect their best interest and protect their best interest. Okay, so this is the legal responsibility of the directors. There are several statutory duties of the directors. Now, what are duties and what are responsibilities? Duties are compulsory in nature and responsibility are not that much compulsory in nature. Duties are more compulsory in nature as if you look at the point of view of duties and responsibilities. And when you say statutory duties means abide by law. So it is as per the law. So as per statutory duties of directors, directors should first act within their power. So directors, all the action and decision that directors take should be within their power. They should not take any decision. They should not do any transaction which are beyond their power. So whatever the power director have as per the constitution of the company, as per the article of association, director should take action and act within their power only. So act within their power only. So this is the first statutory duties of the director. It is the first statutory duties of the director to act within their power. How many duties they do have? They have 7 duties. They have 7 statutory duties. First one is to act within their power. Second, promote the success of the company. So, directors should work towards the success of the company. Their all the action, their all the policies should be towards the success of the company. So, this is the second duty of the director. Third one is exercise independent judgment. So, all the judgment that directors take should be independent, and when I say independent it means it should not be based on some other person's views or some other person pressure or some other person coercion. So all the judgment they have take should be independent in their nature. They should not be dependent on other factors like others interest or their own personal interest. Then fourth duty is exercise reasonable skill, care and diligence. That means they should exercise reasonable skill in doing their work. Care and diligence means they should check everything before doing that, also by doing due diligence or diligence, and take reasonable care whenever they function for the company or for on behalf of the company. Duty number 5, that is avoid conflict of interest. This is the one of the most important duty of the director, to avoid the conflict of interest. Suppose if I am the director of a company and director needs to purchase something from the vendors, so there might be some cases where I might get interested in those transactions where I will earn my personal profit between the transaction. So the director should avoid the conflict of interest and should tell the company that in this transaction they are going to be interested, or in any other case there is a conflict of interest. Suppose company is choosing the vendor to give order, company is choosing the vendor to give order, and one of the vendor is my friend. So if company is going to choose that vendor, if I am pushing that vendor to the company to choose this vendor only, so this is a conflict of interest. So director should avoid the conflict of interest. Then duty number 6 of the director is not accept benefit from third parties. To not accept benefit from third parties. Suppose if any vendor is approaching me to give the order, if some vendor is approaching me that he will bribe me if I give the large order to that vendor. So suppose if vendor X is coming to me and saying, sir, I will pay you this and this much of money if you make that order in my name, if you make that order in my name. So this is a accept a benefit from the third party. So should not accept any benefit from the third party. Director should take reasonable care to not accept any such benefit from the third party and should only act with the purpose of giving benefit to the company. Okay. And last duty of the director is to declare interest in a proposed transaction or a arrangement. So suppose if a vendor is going to be selected by the company to giving order, so I should come forward and disclose that this vendor is my friend and hence there is a conflict of interest. Now it's up to other directors and company whether they go with that vendor or not, but it is your duty to come forward and tell the company about the truth that this vendor is interested. Suppose company is hiring an auditor. Suppose company is appointing auditor. Okay, company is appointing auditor for the audit of their business. Now that auditor is my brother. That auditor is my brother, and I am the director of the company. So it is my duty to come forward and tell the company that this auditor is my interested person. This auditor is my interested person, and I should declare my interest in a proposed transaction or a arrangement. Okay, so these are the 7 statutory duties of the directors that should they follow. Okay, so with this we are done with our chapter number 1, where we have discussed each and everything in detail in our giving examples and have discussed various scenarios, and also by this doing this we have also solved our question bank of this chapter. So we are good to go from this chapter to the next chapter. Now the next chapter will be of more in a practical way, where we will discuss practical approaches, because practical is more interested than theory. Theory is important, theory is more important, because if you don't know the theory, if you don't know the principle and concept, how will you do the practical questions and how will you do the practical chapter. So with this we have completed our third class of the ACCA financial accounting and completed the first chapter, that is financial reporting, financial statement. So I hope these classes are good for you and you are able to understand each and every concept and all your doubts got resolved. And if you have any other doubts, you can just comment on below this video and I will resolve all your doubts. You can join our WhatsApp community and Telegram community by the given links below in the description of the video, and all the free resources will be given in that community only. Okay, so for today we will conclude this class.